help us understand this view of yours. You're saying trade tensions, outside forces, might actually force China to reform a little bit more. What does that mean?
Well, if you look at economic history since 1978, I think in general, China would initiate a meaningful reform when there were external pressure. I mean, example would be WTO accession. Again, there won't be any exception this year. I think given the pressure from the U.S., given the pressure from European countries, it's not just on trade deficit reduction, also about market access. So I think China would be likely to respond in terms of liberalizing certain sectors, service sectors, financial sectors, so on and so forth.
And giving market access to foreign firms, Sitao, is that something you think is highly likely to happen? Because I would imagine that brings down the level of tensions. And if you do think that, which sectors do you think China should open up further? You begin with financial service. I think that's becoming relatively low-hanging fruit because China is leading in fintech. So I think the risk to open up, for example, traditional financial sector is relatively low. Also because China has over 3.3 trillion US dollar reserves, exchange rate has been stabilizing. So the risk for significant capital outflow is relatively small. At the same time, China has been trying to implement various schemes which were aimed at integrating China's financial market with the global financial market. So that's a very logical move. But beyond service, financial service, of course, healthcare, that's very significant. Education, that's very significant. In many areas, local government, particularly in mining and when you look at infrastructure, I would argue foreign investors could have a role to play in so-called mixed ownership experiment.